Bismillahirrahmanirrahim. Assalamu alaikum viewers. I am Khalid from Pakistan. I will discuss with you basics of accounting. Accounting is basic needs in all the organization. There are two types of organization. One which is for earning profit, other which is not for earning profit. The organizations which earns profit make all the planning on the basis of the information which is provided by the accounting. To understand accounting, we have to understand some basic concepts of accounting. First of all, we must know about the transactions. Transactions are dealing or exchange between two or more parties which are recorded in the books of accounting. There are three elements: exchange, parties, and it is recorded and in the money terms and has financial characteristics. So these three elements make anything transaction. Then business is any legal activity which is undertaken to earn profit. There are two elements of this definition: legal activity and earn profit. All the transaction must be recorded in the books of accounts. For this, bookkeeping is used, and mostly students are confused in this term. They think that accounting and bookkeeping are the same thing, but there is difference between bookkeeping and accounting. What is bookkeeping? Bookkeeping is only recording the transaction in the books. It is not used for the decision making. It is only record the transaction and systematically. Then there are two types of the bookkeeping: single entry system and double entry system. Single entry system is used where transactions are, some are written, some are done orally, and some are written by keeping its two aspects, and therefore this system is not successful because it provides incomplete information and which create confusion in the decision making and dealing. And it is normally used such persons who does not know accounting. Whereas accountant use double entry system. In double entry system, every transaction must be recorded by keeping view its two aspects. These two aspects is shown by debit and credit. Left side shows debit, right side show credit. Debit and credit, two Latin words. All the transactions which are recorded are classified into 5 groups. There are 5 classes, and according to some accountants there are 7 classes, but I think 5 classes are main classes which I have shown in form of building. You can see this building which is based on 5 pillars. These 5 pillars are supporting this building. Same matter is with the accounting. These 5 pillars made accounting. If we understand these 5 things, then there will be no problem for us to understand accounting. Assets. Assets are which cover 3 conditions. First is ownership, then future benefit, then financial character or value in money. For example, if we purchase a house, we become owner of such house. First condition has been fulfilled by it, ownership. Then second one is future benefit. We can use it, we can sell it, so we can get benefited from it in future. And third one is value in money. It must have value in money. For example, we can sell it for rupees 20 lakh or 25 lakh, any amount. That is called value in money. Anything which satisfy following 3 conditions, ownership, future benefit and value in money, is called asset according to the accounting. Then second one is expenses. Expenses are such payments which are made for such benefit which has been utilized. We have no future benefit from such transaction, and expenses are necessary to run a business. And third one is revenue. Revenue is the return from all the activities which are undertaken by the business. For example, a bookseller get amounts by selling books. This amount is called revenue. It is return from the business activity. Then liabilities. Liabilities are the amounts which will be paid in future. For example, we have taken loan from a bank. This is called liability. And then the last one is owner's equity. Owner's equity is the amount which is invested by the owner in the business. For example, a businessman has purchased a shop which has value of rupees 10 lakh. He purchased this for rupees 10 lakh. And then he purchased goods which he will sell in the future for rupees 5 lakh. He has invested 15 lakh in the business. The amount which is spent to get the business, that is called owner's equity. These 5 things make accounting. So we concluded here by saying that there are 5 main things which make accounting. That are assets, expenses, revenues, liabilities and owner's equity. I hope you will not feel any problem to understand this lecture. If you feel any problem, you can contact us. Our number is given on the corner of the whiteboard, and you can contact us by dialing this number. And by these words, we will again given you the next lecture on the next things which will be helpful for all the students. Allah Hafiz.